So, gonna hit the record button. Just want to say happy Friday to everybody. I hope it's been a good week. Hope we're green. Hope we've been sticking to our rules, our trading system, our criteria that is, deemed A plus. Appreciate everyone being here once again. And just going through the chat a little bit. We're talking about spike candles. We're talking about trade times, things like that. Yeah, spike candle, when you get a win on a spike candle, it is a really good feeling because it happens unexpectedly. I never really had that happen to me up until recently. There was a spike candle and I was just like, oh my God, I can't believe I finally got to experience a TP with a spike candle. Because usually we get, we have stop losses that take us out because of spike candles. So anyways, here's what we're going to do today. Here's our agenda. We're going to do a quick market rundown on three assets. We're going to use a complete blank screen, no indicators. I want to show you how you can do this for yourself. I'm going to keep kind of doing these things until, I'm just going to keep doing these things because it's important. And we're going to look at some trade executions with the IFVG model. I always talk about how there's, typically three entry triggers to look for with reversals. You could have a unicorn or a breaker block. You could have an IFVG, or sometimes it's just a swing failure pattern. But typically, you can see one or two of the three occur in a specific higher time frame POI. So we'll go through that as well. I want to also show you guys something with the daily EQ. It happened today with the trade that I took, so it's kind of intertwined with the trade discussion. We were having a conversation the other day about IFVG stop loss placement. And I had put a post in my trading IQ section, so we can go over that too and just talk about it a little bit more in depth, because I think it was a valid question. I think, Alice, it was you that had that question. But I think it was such a good question, and I never really thought about ever having that kind of conversation. So I appreciate you bringing that up. And then in terms of a trading journal, once again, Alice brought up the idea of like, hey, does anyone have a trading journal? I thought, you know what, let me share mine. Maybe people don't know I have one that you can use. I use basically something like it. I'll show that later, the links and everything else. So this is what we're going to do today. And before we do that, like I said, if you ever want to provide an assist with a affiliate link, my link is in my bio. If you ever want to try the IFVG indicator, that's with 2 degrees. If you want to join the Unicorn University premium side, that's here. And also, Tradecopia, 30% off, which is probably one of the best trade copiers out there, depending on your, the way your setup is. Like if you are non-cloud based, then Tradecopia is good for you because you can put the app on your workstation, laptop. However, if you are looking at the cloud-based thing, because maybe you're not trading at your workstation all the time, maybe you're trading on your phone, TradeSync is probably a better option because it is cloud-based. You can access it anywhere. So that is the kind of the key differences. But I have noticed Tradecopia has been a much more reliable trade copier, and it has been priced cheaper, and you have unlimited connections, whereas TradeSync has their basic plan is $10 more, I think, and you can only have 2 connections, which means, if you have accounts with Lucid and you have accounts with Apex, that's 2, right? And then you can max out up to 10, I think, per connection. So a couple of differences there, but anyways, if you'd like to support me, feel free. I might share some other stuff too down the road with just like what everyone else does, I guess, right? With like affiliate links to prop firms and codes. And I used to have some of that stuff, and then I kind of just cleaned everything up because it's not the end of the world for me. But anyways, just putting out there, just doing my due diligence. I'm going to just keep the news up for a second. Just want to make sure I haven't, nothing crazy happens while we're on the charts. Let's talk about a market rundown. Let's go with NQ to start. So this morning, when price opened up, and I'll show it to you this way because I post higher time frame biases in my section here. Let me just, why can't I move this over? Okay, let's do this. So I post higher time frame biases as pre-market, just so if you want to follow along, you can. I know people have had issues with understanding higher time frame bias, so I thought maybe I'll start doing it myself. I think it's also a good, kind of like a good exercise to put yourself through, because then you can see how price moves on a higher time frame, and if your bias was correct. You're not going to always get it right, but if you can kind of follow the concepts every day, you're going to start to strengthen that that piece, right? And you're going to train the muscle memory of what it looks like and things like that, right? So anyways, today with NQ, we are at all-time highs. I to be honest with you, I put ERL to IRL just because we're at an old swing high, and you should be looking, technically to short from an old swing high. But obviously, when price is making all-time highs, you should probably, steer on the side of being bullish, right? So I put this out here in two parts. So I said if the H4 candle closes at 10 a.m. and it sweeps this level here and closes back below, then it's pretty clear to me that price action might potentially move lower, and then it will move back lower into that volume imbalance that we have here, which was originally, I believe it was an end dog, if I'm not mistaken. But anyways, the other side to this is if it closes above, then obviously to be bullish, right? Now I hadn't said that here, but that is theoretically what you would do. Because what that means, it's invalidating the swing high. So let's go back to the chart. This is what ends up happening, okay? So let's go like this. Let's make it a little larger. All right, so right here is the 6 to 10 a.m. candlestick. This was that swing high I was referring to, which is the previous all-time high. So that's our H4 buy-side liquidity. And you can see price closed above it. Even though it had a pretty decent tail here, you would still want it to have seen this close below, and then that would have been a clear sign of bearish pressure, right? And potential reversal, like we've seen in the past, right? For example, like if I go here, and I'll just draw a line like this so you can see what I'm talking about. But like if I just draw a straight line like this, you see how there you have a wick that sweeps and it closes back below, and then you have price move lower, right? Something like that. But when you have a situation, let's move here, for example, where price closes aggressively above, and you can see price goes higher, right? Now, what happens after is of no consequence at this point. It's just the idea of understanding what to expect, right? When price closes in specific fashion. So price closing above here, that's clearly showing us we should be bullish, okay? And like Matt always says, I think he's going to put a t-shirt, the trend is your friend until the end of the trend. I would buy that shirt, 100%. So let's go to the 15-minute. What do we do with the 15-minute? Well, we have to understand where our, where the start of the day is. And 9:30 is where we look to trade. So here's 9:30 open right there, okay, off this candlestick. So what we're looking for now is price inside of, aligned market structure, bullish aligned market structure. So right here, we can see that there is a sweep that happens. I'll mark that right like this. 15-minute sell-side liquidity, and then we can also see that price was inside of a bullish FVG here. I'll mark it like that. Okay, so that's the 9:30 open. We can also see below us, now we obviously know what happens next, but let's just mark these levels so we can understand what we're looking for. So there is another 15-minute sell-side liquidity level right here. And then, of course, let me get rid of this H4 for a second, because that was the previous all-time high. We don't need that. We know we're being bullish. And then we know we have these FVGs all lined up here, right? There's one here, and there's one here. Okay, so these are the POIs of interest. If you're trying to align that 50-minute bullish long with the higher time frame bias of being long, you need price to move into one of these areas, if not all, and then try to look for that reversal on the lower time frame. So now let's just go to the 1 minute and see what we have. Okay, so I'll go back to 9:30 here. I'll mark it right. Like I said, I'm not using any indicators, okay? Because the beauty of what we do with ICT is that you should be able to chart without anything and map out exactly what you need to see to help you. So here's 9:30 open, and I just want to share what happens, okay? Because at 9:30 open, we do get that sweep on the 15-minute. We are inside of a bullish FVG, and I want to show that there is a breaker block here. Okay, so there is a breaker block here, and you would say that there's a confirmed unicorn. Now, as we know with the unicorn doesn't have the, like, anyone that has traded it has probably shared that they've got anywhere between 40 and 60% as a win rate on that system, right? Now, depending if you're taking 2R or 1R, that can probably change things. But if you were to take this trade as a long, here's the thing I'll say. If you took this trade here prematurely, this is why you lost. Because remember what I said earlier? I said if the H4 candle closes at 10 a.m., what does that tell us? That tells us that we need confirmation. You can't execute a trade if you don't have confirmation. So let's go back to the chart. This loss would have been avoided. Even if it was a win, that's fine. You still have to wait for confirmation. So we can't technically get confirmation until 10 a.m. So let's move to 10 a.m. and see what happens with price after 10 a.m. And I think there was some news at 10 a.m., but I don't believe it was red folder. So you would have avoided a loss by just waiting to see what price does and how it closes, above the H4 or below the H4. And maybe I should put that level back up here because it will be important. H4 side, and let's make it 2. Let's go back to the 1 minute time frame. And so there's that thick line right here. That is the previous all-time high. So at 10 a.m., price closes above that level. So all of this right here was that wick, right? And then the body would have closed around here. Now, let's get rid of these POIs because we don't need them. We only need to know what happens a little bit before and a little bit after. So let's take this into consideration. So just before 10, we get a sweep tagging more liquidity. Let's get rid of this. Let's get rid of this because we don't need that. Why do we not need that? Because price tags this 15-minute FVG right here. I'll mark that off properly. Okay, so 15-minute FVG. So here's the thing. We talked about 3 different types of reversal patterns that we're going to typically see. 1 or 2 of the 3 are typically going to present themselves. So in this situation, the first one that presented themselves, which is basically the trade I took today, was an FVG. Very clear. Just like this. This was the IFVG. And all I was looking for, from my perspective, was a daily EQ, right? We use that daily EQ. So how do we get the daily EQ manually? Well, you go to the daily time frame, and you're basically measuring the high and the low of the daily candle and marking the 50% level, like such. And I'm just going to get rid of the 0, get rid of the 1. So we only have the 50. Okay, so now the thing is this level is dynamic. So what does that mean? It means that, let me just go back like this because we're going to need to, let me just put that back up there. Just realized because of the dynamic part, I'm going to have to manually draw it from here. So here's the high. And then we will be going all the way to the market open, right? So market open is at from right about here. So market as such. Okay, there we go. So we have the daily EQ. Now you can see why I use an indicator for the daily EQ, right? Because otherwise it's a pain in the ass to do it, right? But I wanted to show you can still do all these things manually. And it's good to know how to do it because for whatever reason, if indicators start disappearing, you're going to be like, oh shit, how do I do that? This is how you do it, okay? So daily EQ gets tagged here, and that was what triggered for me to go into this long, because the daily EQ is one of those plays where I love to see a sweep of the daily EQ and then a move higher. If we align this with the market structure idea, which is the H4 close bullish, at the previous all-time high, and we have aligned market structure, 50-minute FVG, you can see how all these kind of concepts come together. So here's the long. Enter right about here. Let's get rid of this line because it's annoying me, right? So I basically entered right here. My stop loss went just below here, and it's one of those things we're going to talk about in a bit, which is why would I decide to put my stop loss there? And why would I not, say, place it like down here, right? And then I'd be looking for 1R. So for me, this was the trade that I took this morning. I shared the whole thing inside of my daily trading thread inside my channel from beginning to end. If you go back and check it out, you'll see everything is there, the whole setup, what I was looking for. Even before price moved into the daily EQ for that second time here, I even said, I want to look for price to move into that level and then sweep. And that's what it did. Oh my God, dude, that is hilarious. Thanks, Alice. I am going to save that. That is amazing. That's amazing, man. I'm dead. I'm literally dead. Brilliant, man. While I'm talking about all this stuff, you're working on photoshopping and doing stuff like that. That's amazing. This community is great, man. This community is great. Okay, so let's get back to this. So we aligned the market structure for the long idea. This is the setup I took. One thing I will say about the IFVG is that I was really, really panicked because I saw this sweep up higher and I thought, oh, this is going to be one of those super quick type of wins, which is, obviously what you want to see, right? But price swept it and went back down. And I was like, oh, no, that's not good. And then the next two candles ripped lower. Now, the thing is, when you're placing that stop loss, you definitely need to make sure your stop loss is below the IFVG itself. Because typically, if price starts to close below the IFVG, the trade's cooked. Okay? So in this scenario, what we got was that price respected the IFVG and never closed below it. So that gave me hope. And after that had happened, price then started to move higher. Total trade time was about less than 10 minutes. It was a good trade. Now, if we take out the IFVG side of things here, because remember I said there's a couple things we're looking for. IFVGs, breaker blocks, unicorns. If we're looking at this in terms of like a breaker block, this breaker block right here is way too high for us to want to use, right? Compared to where the low is. We would have wanted to see something like this maybe down here. So for me, I wouldn't really consider this a valid breaker block to use with like a unicorn. So that leaves the IFVG and it leaves a swing failure pattern, right? Right here. We have a lower high and then a higher low. That's our swing failure pattern. So like I said, we're going to see typically two of the three form at these higher time frame levels. So that was NQ today. And then if we just look at what happened afterwards, price goes back a little lower, respects the IFVG, and then pushes higher. You could even say it respected the daily EQ one more time here, right? And now we can see price has gone even higher. So NQ, H4, 50-minute, 1 minute. There's your execution. If you were looking for a unicorn, you didn't really get it. Now, if you wanted to play this as a unicorn, like I said, I wouldn't have necessarily considered it. Like if you have your high here, you have your low here, then you have a lower high. You're looking for the highest up closing candles before the leg down that takes liquidity. Here's your technical breaker block, right? The only issue I would have had with this is that it's just too far from our invalidation. Usually I like to use the swing point. Like if I was to measure a unicorn, I would want to use that swing point. But if we look at how many points this thing is, 115 points is massive. I mean, the thing is, even though if you did take it as a unicorn, you still got to 1R. Did you get to 2R? I don't know. Nope. Because you're looking for, 231 points. Like that is what we deem a home run, right? And the problem now is if you were to have set your stop loss a little bit below, let's say you set it for 50 points, right? you would have got stopped out before price moved higher. So you can see the challenges you're going to face when the breaker block is placed too high or too far away from the actual swing point. The swing point here is what I would call it, like a respected, or a protected swing low, right? That's what we could call that, right? Protected swing point. I'm not sure exactly what the terminology is, but that's the verbiage that I've learned that you can call it. So once again, unicorn, no good. IFVG, perfectly fine. And the reason I like the IFVG over the other two is because situations like this, it gives you the most optimal entry on the reversal. And you don't really need much in terms of confirmations, like things you're looking for to make that trade work. But once again, H4, 50 minute, 1 minute, those are the alignments. You can see how I put that together. We have no indicators on the chart. I'm not sure. Does anyone trade GC here or CL? If you do, maybe I will go into the other two. But if you don't, then there's no point going into it. But maybe if you want to let me know. Tracy says you do. Okay. Is that gold and CL or just, sorry, GC and CL or just GC? Like I said, I don't want to, oh, you do both? Okay. Okay, so we do have some people. Let's talk about it. No problem. Let's talk about it. So hit X. Let's go to bias again. So I also do a bias for GC. GC, I had mentioned that from yesterday there was an objective that we wanted to see if price would respect the internal range liquidity or go higher, and it ended up rejecting, and then it went to the low, sweeping that liquidity level. So that was that assessment of IRL to ERL worked out fine. Today I was looking for basically, external to internal, right? Because we have a nice clear sweep here. I'm looking for it to go higher. So let's look at GC and see what it did. So far, this is the analysis. So far, price is moving in that upward direction. It does have a lot of LR to wipe out up here. Can it reverse from any one of these points? Of course, right? Anything's possible. So here's your bias. You're bullish. Okay, let's go to, I'm just going to use the micro just so we can go to the 50 minute. I don't want to disrupt that chart. Let's go to the 50 minute, and if we look at where 930 is, that would be about here. So Tracy was also bullish on GC for the same reason. That made me scared in that short IB trade, but it went right up after TP. Okay, so you took the IB trade. Cool. Here's 930. What is price doing at 930 on the 50-minute time frame? Well, it's doing two things. It's sweeping a 50-minute sell side liquidity level, which is also inside of a bullish 50-minute FVG. Okay, so there is your market structure alignment. Exactly, all bullish FVG. Let's go to the 1 minute. What is the 1 minute doing? I swear, if you just keep rinsing and repeating these concepts, and you're going to just start to see how everything just looks the same. Like, price is so fractal, it's insane. For me personally, I can just read the charts significantly better using H4, 50 minute, and 1 minute. I think that's one of the biggest challenges I faced before. Was I used to be afraid about the 1 minute because it was just moving so erratically. I didn't understand it, so I would use the 5 minute. The problem with the 5 minutes, things take too long to play out, and they don't actually look like how they look like on the 1 minute. So you have to kind of observe things in a bit of a different way. For me, I've grown very accustomed to now using the 1 minute and understanding the dynamics of seeing how price is moving and understanding invalidations and things like that. So H4 is bullish, 15 minute is bullish. Go to the 1 minute time frame. What do we got? Well, lo and behold, we have a liquidity sweep, right? And remember, 930 is right here. Okay, right here. This is 930. So sweep, liquidity sweep. I mean, super clear breaker block. Right? And so in terms of like a unicorn setup, you do get it. I would consider this volume imbalance the FVG inside of the breaker block. That's why I would call it a unicorn. But if you don't want to call it a unicorn, that's fine. it's a breaker block entry. You would just call it a CISD entry, right? Here's your CISD right here, right? The big issue here is you don't get the retracement back to the top of the IFVG or the CISD. So this is what we call a front run. Okay, so unicorn, front run. Fine. What else do we have here? There's no swing failure pattern because we know there's a unicorn. Is there something else? Well, there is. There is a IFVG right here. Now, it's super small. I would probably mark it like this, and I just want to show you why. Whoops. So if you notice, there is a super small volume imbalance right here. And when we're doing IFVGs, you want to stack them, especially when they're this close together. You would just stack them as a range. So that's what I would have done. And this type of trade, your entry would have been like a market order right there. Because the entry is so close to the low, I would have just used the swing low, and then I would have just gone for that 1R trade, right? That's basically the mechanics of how I trade. And the thing I'll tell you about this, there's a psychology piece to this. And Mika had actually shared this with me, so shout out to Mika. But I watched this video he shared with me, and the thing with it is, if you take a 1R trade, your probabilities of success are significantly higher with the IFVG model. You're probably looking in the 70 to 80% win rate percentage, okay? If you start to increase your RR, looking for higher RR, it starts to lower. You could be lowering anywhere between 60 to 70% win rate. If you go higher, it dips into the 40 to 60% range, roughly. And this is just from backtesting I've seen with other people who have extensively backtested. And then for my own data, like I said, I've experienced the 70 to 80% win rate. But this is how I would have set the IFVG and taken 1R. And the thing with the psychological piece is, are you okay to miss out on all of this? And that is a psychological thing that kind of weighs on us as traders, because is this enough for you? Or do you need more? Because price isn't going to always do this, right? Granted, we are in very volatile scenarios. It could do this, but the thing is, once again, your win rate most likely will start to get lowered if you start looking for these types of moves. Now, if you're skimming profit, completely different story, right? You take some profit here, stop loss goes to break even. Maybe you're taking some more here. Maybe you're taking some more here, right? And then maybe you're taking some more up here if there's like any sort of key higher time frame level or something like that, right? But anyways, that's how I would have set up GC today, right? And we've aligned H4 with 50-minute and the 1 minute. And we saw that there is a unicorn, it got front run, but there's also an IFVG there. No swing failure pattern, okay? So that's MGC or GC. Let's get rid of that. Let's go to CL. So with CL, CL is super simple to me. I mean, there was a H4 FVG here. Price was sweeping into. The candle hadn't closed yet, so I wanted to see it close above. That's that H4. And then I would be looking for an internal to external move. Super simple. Let's go back to the chart. Let's go to MCL. Let's go to the H4. Get rid of this. And let me get rid of this. So if I'm looking for that bullish continuation, right? We had this H4 FVG like this. We had the H4 buy side liquidity level. What I was saying was I wanted to see how price would close with that level. And price actually did close above that level. So technically, I would have still had that bullish bias, right? And like I said, you're not going to always get these biases right. Price will do whatever it wants. All you can do is use probabilities in your favor. So for me, if I had a bullish bias today on CL, I'd be looking for price to obviously hold above this level and then move higher. As you can see, if we go to the 50-minute though, we are not getting any sort of price action holding that level thereafter. So let's mark out 10 a.m. for a sec. So 10 a.m. is about right here, okay? So price closes literally right here. So if you're waiting for that confirmation at 10, what that means is that you would need price to sweep lower to move into align market structure. Now, here's where the flag comes in as a trader. If you know that this higher time frame level is a very key level for you to hold, and you still need price to go lower than that to go long, that should be like telling you like as like a red flag that that doesn't make sense. Why does it not make sense? Well, the idea is that you want to be trading up here, not below here. This was the line in the sand. So anything that happens out here becomes very risky if you're trying to align that long. But for the sake of this session, let's just identify where the 15-minute sell-side liquidity levels are. Okay, and see what happens. So, get rid of this. And there's even a level right here, actually. Right there. So this is 1030 right here. Okay. Now, if you're trying to align the long, let's see what happens. Because this is okay. All of this becomes a little bit risky. But let's see what happens in this little pocket here. Because remember, we're trying to align the long. And we're trying to do it after 10 a.m. because we wanted to see how that candle will close. So what happens at 10 a.m.? Let's put that marker back up here. Okay, so that's that key level that we're looking at. And then we needed a 15-minute sweep. That sweep happens right here. What's really, really funny about this, and keep in mind, I haven't looked at this chart today. I only looked at the H4. I have no idea what happened on the 15-minute, and that's why I'm kind of marking it as I go, because I had no idea. But I just wanted to do it this way, so it's real. There's no planning involved here. I'm literally using the foundation to the ICT concepts that we all use and putting it all together in the way that I've learned how to use them through Matt. So here's your 50-minute sweep. What do we have? We have a liquidity sweep. And then we have a lot of choppy price action here, right? All of this is pretty choppy. So how do you identify what to do in this situation? So if we're looking at this, there's a low here, there's another high here, and then there's just chop, okay? So if we're looking to trade this as a unicorn, it's a messy unicorn. But there is a swing point that is here, and there's a swing high that's here. So swing low to swing high, to me, right here is your breaker block. And the thing with these types of situations or plays is if you can't identify the concepts quickly, then either one of two things. You're still learning. Makes sense. It's going to take time. But if you're not learning and you're already in the execution phase where you're able to see things very quickly, kind of like what I just showed you right now, if you can't quickly put that breaker block together, then that tells you that the structure is not clear and that you should probably avoid it. Okay? But to me, while this is actually technically not very clear, because this candlestick also makes a low and a high at the same time, this becomes questionable, right? So then you'd have to start relying on change state delivery and other types of market structure because this is, like I said, at the top, this is a very messy type of unicorn. Now, there's no IFVG here, but there is a change of state delivery. So we have a low here, but then we have another low. So where's the CISD? To me, the CISD is right here. This is the CISD that I would consider because this candlestick sweeps. Does it sweep it? What's the low there? 94.67. 94.67. So you have equal lows here. So if you use this as a CISD, that's cool. If you wanted to be safe and just say, you know what, that wasn't a technical sweep, I'm going to use this candlestick here. Yeah, CL definitely does a lot of equal lows and equal highs, 100%. And that's good for liquidity, right? That's a clear sign of where price could head to. So whether you use this level or this level, it doesn't matter because look at how price is respecting it. Now, there's also that FVG here too, right? That we would use for the idea of the unicorn. Now, I'm overlapping a lot of different concepts here. I'm not trying to confuse you, but I just want to show you that depending on what you're looking for, you'll probably see it there. Because if you don't see it there, then there's no trade, right? So if we want to use this as a breaker block, well, then we need price to close above the breaker block. And then we want to enter here. Stop loss would go at the low, right? So something like this. Oops. Like that. Which then means our entry would be right here on this candlestick. Because we get a closure here. We would enter here. And for me personally, I always go for 1R moves. So this would have been a win. So the higher time frame bias was aligned with the 15-minute market structure right here. And then you can see how that long would have got put together. Now, there's no IFVG here, so for IFVG trader, there's nothing to work with. But if you were like a unicorn trader, you do have a very risky setup here that you could take. Now, if you don't deem this a unicorn because that breaker block is not clear to you, that's okay. Let's just get rid of all this stuff here for a sec, and let's just show one other thing. So if you don't deem that a breaker block here, then that means then that all of this up here is technically your breaker block. So this was 95.36. Okay, so I would have probably used this as my breaker block. And similar to the previous example, way too high, right? This is not ideally what we want to see. We want to see the breaker block closer to the swing point. So I would invalidate this as being the valid breaker block in the first place. It's some form of an order block, sure, but I wouldn't consider it in that realm of the unicorn model. So then what that means is that if this isn't a breaker block unicorn setup and this isn't a breaker block unicorn setup and there's no IFVG there, well, there can leave us with only one other option, which is a swing failure pattern. So what that swing failure pattern would then be from here to here to here, and then price moves higher, right? So it would be this structure here. Now, when you have these types of structures, you want to look to the left to see if a break of structure occurs. Now, I'm not saying to trade a swing failure pattern. I think it's like the least, I think it's like my least favorite one that I would ever use. Back in the day, I used to trade the 2022 mentorship model, and a lot of it was basically kind of aligned like this. You just mark this off as a break of structure. So you have your BOS here, or market structure shift, or whatever terminology is used in ICT concepts. You'd wait for price to crack above there. You would pop up your Fibonacci. You'd be looking for OTE, something like this, right? Or you could use, let's use a different one, golden pocket. There we go. So here's your golden pocket. So you have the 0.5618. Price will retrace into optimal entry, and then you would be looking for price to extend higher. And if I show you targets, you'd be looking for, higher targets up here, whether you're using, a -6-2 ratio or whatever. Point of the story is, this is just another way to kind of have traded this situation. How you decide to do that is up to you. I personally would never do this anymore. For me, it's just the IFVG is the way, but I like to show the unicorn as well, and also identify the swing failure pattern if I do see it. So H4, 50-minute, 1 minute, the long actually worked, okay, until it didn't work. Because if we looked at the overall bias that I was hoping for, I wanted price to move. Let me go back to GC because I have a clean chart there. Or sorry, not GC, CL, excuse me. So ideally what I wanted to see was a move from internal to external. So even though the trade bias was correct in the sense of H4 50-minute, 1 minute bullish alignment, the overall objective is going to be a fail because price didn't take out the ERL and it actually went lower. Okay? So you can do this yourself. Blank chart, it's fully possible. You really don't need much to work with. You just have to understand how to read that price action, of course, in real time. And things get challenging in real time because our emotions are there, right? When we're kind of doing review and backtesting, there's no emotion involved because it's just very logical. But the whole point of the review is to increase the muscle memory in what you see, so that when you start to see those patterns in real time, you're going to start operating with that muscle memory of knowing and having the confidence that, oh, this is a valid breaker block, or this isn't a valid breaker block. This is a valid IFVG, or this is a valid swing failure pattern, right? How do I want to be on the right side of this? So you can do this. My recommendation as an exercise to you would be show up to the chart every day. If you're not trading, that's fine. Just do it as a review. Identify the higher time frame bias, and then see if your bias aligns with the lower time frames, the 50-minute and the 1 minute, and just start observing. Like I said, observe what happens at those higher time frame levels, like I showed you, because you're going to see one, two out of the three types of reversals. Okay. If you have any questions, let me know. Is it even better if you have an IFVG with the FVG very close? Do you mean if the FVG is like to the right of the IFVG? So, yeah, okay, so basically like what we saw, well, we didn't actually see it here. So truth be told, when I'm trading an IFVG, that FVG on the right side doesn't matter to me. Of course, if the IFVG is on the if the FVG is on the left, and then the candle that confirms the IFVG creates another IFVG, I think we call that a BPR, and I do believe that is a very powerful sequence that you want to see. It doesn't happen often because it's super clean, right? How often do we see super clean setups? We don't, right? Very, very rarely is price going to show us that, super easy. Like when we see influencers on YouTube share examples, they're sharing like the cleanest of examples, right? They wouldn't show an example like this, right? I'm showing you this because it's real. They'll show you the most super squeaky clean type of example, and then when you show up to the chart to try to replicate that, you never see it. Or maybe you see it once in a while. And I'm positive you know what I'm talking about, because I've been stuck in that position where I never saw the clean setups. I would only see shitty setups that were messy and choppy, and I didn't understand how to read that, right? All it says, if you can check after an IFVG trade I took on ES. Okay. Let's take a look at ES. What was your trade? $9 a.m. Okay, I'm going to put back the indicators because they are there to make my life more simple. I can see why I have them now after charting with nothing. I really rely on, in terms of like the efficiency, it takes so much stress out of the game, honestly. I mean, these are simple indicators too, just marking simple levels. Okay, so 9 a.m., you took a IFVG. Was this a short? This? Or was it somewhere down here? The long? This? Is it this right here? Okay, interesting. Okay, well, let me ask you, what made you take that trade? And I'll read what you wrote, just because if anyone's listening to this on the recording, they'll have some reference. I'm just curious. So, one thing I'll say about this, I like that it's below the daily EQ. 50-minute FVG? Okay. So, one thing I'll point out is when I'm trading IFVGs, if the daily EQ isn't included, then I need to see a H1 or H4 level taken out. If that H1 or H4 level is like a London high, Asia high or low or whatever, that's cool. If that level isn't, that's also fine if it's an overnight session high or low. But ideally, I want to use those H4 and H1 levels. I don't want to specifically use a 50-minute ERL. Now, that's not the case here, but I just wanted to kind of put that out there. So let's go back to what's happening here. Okay, so here's 8 to 9. There's the FVG here. I don't know if that was actually... Oh, you said it was a 50-minute. That's why. Okay, my mistake. Yep. So you have a 50-minute FVG right here. Let's mark that off. Lock it up. Go to the 1 minute. Okay, so another thing I'll mention, I've said this before, but whenever you have ranges, like it could be a breaker block, it could be an IFVG, it could be a volume imbalance, it could be just a FVG itself. Always keep the EQ, like always have the EQ activated, okay? The reason you want to have the EQ activated is because if you're bullish and you want price to reclaim that if you want price to reclaim that range, like that FVG in this case, you want it to be staying above that 50% level. Even if it dips below, that's fine, but you want it to be above the 50% level and you want it to respect it. So that's why I keep it on always. Some people I've seen don't have it, and I'm like, oh, you're missing out on so much additional information of what that can tell you about the price just by having that one little line. So add that line to your charts on those ranges that you make. It could be a box, it could be, like I said, a breaker block, it could be an FVG, it could be an IFVG. Put it in there anytime you're creating a range. Put it in there. Okay, let's get back to the chart. Okay, so Sweaty Spaghetti, awesome name. There's a lot of awesome names, man. It's great. I've seen some other like X-rated names too, which is really, really funny. Anyways, let's go back to this IFVG. So the question here is, you want me to review this? For me, when I'm looking at this on ES, I think this is 5 points. Is it 5 points? And I don't really have a gauge because I exclusively trade NQ. Just remember that, okay? So to me, this looks huge, number one, okay? So we'll mark it anyways. Oops. Okay, so here's the IFVG. And it's going to make this a little bit lighter because it's interfering with my view. Okay, there we go. So IFVG, below the daily EQ. Now, two things about this setup that are flags to me. I don't know if this worked out or not. Actually, I'm kind of curious to see. Okay, so it doesn't work out. Well, I guess it could have worked out, but I'll explain the flags. The first flag to me is the size of the IFVG range. It's a little big, right? Because if you're placing your market entry here, your stop loss could go below here, which is fine. But if you wanted to, maybe use something like this, right? 6 point stop loss, you'd be going for 1R maybe. You would have got that 1R. Sure, got it. But here are the flags for me. If you start to lower this, you start to increase the direction, right? Like for whatever reason, let's just say you wanted to use the swing point. Well, look at where 1R is now. It's too far, right? Let's say you wanted to use the bottom of this little volume imbalance here. Too far. And these are like obvious levels that we would use or that we would think about, right? Like swing point, protected swing point. Volume imbalance, obviously below, right? Because what if it goes lower? There's also this FVG here, right? You want it to be below that FVG. So let's say it's over here at the bottom of the FVG that formed there. Here's your 1R. Fails. You would have to have had a super tight stop loss. So for me, I would identify the close of this candle right here. I would have liked to have used that. Another thing you could have done is mark out 50% of that FVG like this and just put it maybe 1 point below. That would have given you 1R there. But does it hit? It hits right here. I don't know if you would have stayed in it or not, but it did hit there. So that would be another way to kind of go about this. To me, that's a lot of work. I wouldn't have done that in real time. I would have just simply used it right here. But the first flag is the size of the IFVG. I don't like the size of that IFVG personally. Even on ES, like that's really big. I probably would have wanted to see it like half that size. But nonetheless, this is what it is. The next thing is when you're looking at the momentum going through here, look at how many candles it takes to close above this thing. Does that show momentum? Momentum is when you have massive candles like this, right? Like this, sweeping, breaking through. So I have that checklist that I often use, right? Forget the kill zone here. Premium discount, sure. I mean, that's another thing I'll talk about actually, because I don't think this is technically valid for how I would look at it with the premium discount. But let's just work on strong reaction and momentum. Is there a strong reaction? Yeah, there's a strong reaction. Is there a momentum through the breaker block? Or sorry, through the IFVG? Oh man, I'm mixing it up. To me, this doesn't really scream momentum, because look at the size of those candlesticks once again. Even though it closes above, and yeah, maybe you could have got 1R or something out of this, anything can work. Remember that. Like, price will do whatever it wants. You're playing probability. So depending on how you position that stop loss is literally the line in the sand on whether you were profitable on this or not, in my opinion. And whether you're like holding it or moving your stop loss to break even or not, things like that. And the other thing too is like a lot of trading is subjective. So all this is saying, hey, I saw momentum. It is what it is, right? For someone like myself, I don't see momentum, and I do think the IFVG is too big, and I don't look at it in a good way. I look at it in a cautious way. So that's we'll talk about that. That's the momentum piece. That's the flag. The IFVG is another flag. If we're looking at premium discount, this is actually a really good conversation. So whenever you're taking an IFVG trade, yes, we want the IFVG, if we're going long, to be below the daily EQ. But here's the caveat to this. You don't want the setup to form and confirm too close to the actual daily EQ, because we know this is a very, very strong SR level. So even though price closes above the daily EQ, I would still deem that as too close for comfort. And I would say that this is actually not valid if we're looking at the premium and discount side of things. If this setup was lower, that would make it better. Like, let's say this moved deeper into the FVG and then moved up higher, and your position would have been like around the EQ. Then you could be targeting that underside, right? I definitely prefer it to form below the EQ and have room. Now, when we're playing sweeps off of daily EQs, ideally, like I'll show you, if we look at today's trade again, let me just go back to, let's go back to today's trade. So if we go back to this trade, price, look at the difference, okay? Yes, the strong reaction was there, V-shaped recovery, but look at the momentum. This is what I would say is momentum, right? 1, 2, 3 candlesticks to confirm, and that last candlestick was pretty strong. The second thing is, I understand the daily EQs here and prices here, but let's just go back to ES for a second. Okay, look at the difference. Look at how much lower price went, and then look at the reclaim. You see the difference in the two? One is stronger than the other. One is moving quicker than the other. That is a key thing to consider. So I personally wouldn't have liked this, because for any reason, based off this closure, which doesn't scream momentum to me, price could have literally just went like this, right? At any given moment. And sure enough, that is what price did. It went up. Sure, it went up, but look at what it ended up doing anyways. That's the difference. If we look at what happened with NQ, this is where that setup was. Look at what it did. Yeah, it retraced back into the, you could say the order block or whatnot, but look at what happens. It carries forward, right? The momentum carried forward. And the other thing too is my TP was aligned with ES, and I'll talk about that right now because I think it's a really good point to make. I did want to talk about this, but anyways, I hope that makes sense, Alice. I really hope that makes sense. And like I said, it is subjective, right? Like, we see things differently from one another, and that's okay. But for me, my muscle memory has trained me to look for momentum like this versus looking for momentum that looks like this. And then, of course, the IFVG size, right? And then the third thing, too, is time, right? Like taking a trade before 9:30. For me personally, I was taking trades like that, and then I realized, you know what? I'm putting myself at more risk because we know how much volatility is injected into the market at 9:30. So why would I want to put myself on the wrong side of that volatility, right? And it just reduces my exposure, because the more exposed we are to the market, the more risk we actually take on. And my job as a trader is to put myself in the highest of probabilities. By trading pre-market, that's not putting myself into the highest of probabilities. It's putting me into the lower end of the probabilities, because, well, I wouldn't say lower end. It's lowering my probability, right? It could still be high, but it's still lowering it. So for me, I tightened up that window, 9:30 to 11. I'll tell you, it's done wonders for me. My win rate is insane. I'm hitting TPs with 1R, and if it goes higher, that's great. But it's okay, because I don't really care. I don't need to make 2R, 3R on the move. My job is to get a payout. And if I need 5 days above $150 to get a payout, then why do I care about 2R or 3R? All I care about is getting above that dollar amount. So if I'm risking $300 on a funded trade at 1R, all I need to see is 300. And if it goes higher than 300, then those are bonuses, right? Maybe I remove my TP because I like the momentum, and I'm like, let me see if I can squeeze a little more out of it. Usually when I do that, it never ends well. I work way better when I just set it at 1R. So if I want to risk 300, I'll make 300. Guess what? That's 1 out of 5 days done. And now I just got to do that again tomorrow. Lock up the account. Like, it doesn't have to be so complicated. You don't have to hit home runs. The base hits are going to do wonders for you, in my opinion. You just have to retrain the way you think about things. And I can tell you, when you start stacking wins, the mental, like the positive mental reassurance you give yourself as a trader goes a long way, because it gives you more confidence. You're going to start to feel better about yourself when you show up to trade. You're going to feel better about yourself even when you shut down the computer, or you're trading on your phone, you turn it off, you made the trade, you win. You're going to feel like $1 million. But overall, what that's going to do is it's going to make you feel like a winner. Hey, Rick. Oh, you got it, man. This is recorded. I just hope it records, because sometimes the recordings fail and they lag, so I can't share those ones. And that's the beauty of being able to show up to the session live, because you get all this. Or maybe you record it on your end. But I am recording it. Hopefully, fingers crossed, everything works out. Thanks, Sweaty Spaghetti. Appreciate that. First time tuning in. Appreciate having you here. Honestly, anyone who's a first timer, I appreciate you. And anyone who's been, with me longer than that, and I see a few, I appreciate you guys as well, the OGs. And if you have questions, guys, just drop it in the chat. I'm right here. I can see it, and I'll help answer those questions right away. Oh, thanks, Ali. Oh, man. Appreciate that, bro. Okay, so let's go back to the memo here. Level 10. Yes, sir. Appreciate you, man. Nico, what's up? So we did the rundown. We talked about the trade executions from today. There was a part about the daily EQ I wanted to talk about, because I think it's really, really important. So when I was setting up this trade, right here. So at 9:52, we were looking at this, and I wanted to see price move into that daily EQ. This is today's trade, okay? So I mentioned that that's what I was looking for. And then the other thing I said was, there's a huge problem with the way price is situated, okay? What does that mean? I'm just going to go back up for a sec, because this is one of the first things I mentioned right here. NQ is above the daily EQ, and ES is below the daily EQ. See this? See the discrepancy? Sanu, just drop it in the chat, bro. I'll hit it up. Do we need an FVG with the IFVG? You do not. You do not. You do not. So, just to show this right now that's on the screen, when I started to see this, I didn't like this. Okay, why do I not like this? Because even if an IFVG forms on NQ, the thing I don't like is, because ES is below the daily EQ, if ES starts to move higher and tag this could destroy the trade, and reverse, it hits the underside and rejects. It's going to pull this setup lower. Ideally, we always want to have correlation. Okay, so if we don't have the correlation, how do we trade this? Okay, and this is what I did today. So I marked that off. We're cautious. And then I said right here, I said the idea would be that ES would have enough room to tag the underside of the EQ. And then that's where I want a time to take the TP with NQ for my 1R. So what does that look like? So what that means is when the sweep happens here, I get the setup. ES also sweeps, but now ES has enough room to move. And when ES has enough room to move up to this level, NQ should already have been hitting my TP. Okay? And I'm just going to show you what happens. So right here at 9:58, I share the trade that I'm looking for. I mentioned how I wanted to see the H1 FVG being respected on ES because there was no other ERL liquidity until down here. So if this is being respected, then this trade setup is probably going to be respected too. And look at the distance between the price action off the FVG to where the daily EQ is. There's a good amount of space and it hasn't been tagged. Look at the liquidity being generated here, right? Equal highs, LRLR. There's a lot of liquidity resting here, okay? This is how I'm viewing the trade. I'm trying to share this in the thread while I'm trading. Sure enough, we get the TP. I was a little panicked here, like I said, but I liked how price kept closing above the IFVG. And then, of course, it reclaims the daily EQ. Here's the VWAP for the session on 9:30. You could see how much it was rejecting it. I did not like that at all. But then when I saw this candle, I was like, okay, I'm feeling so much better now, especially even with this candlestick. I felt so much better, but this candlestick didn't close like this until the end of the 1 minute candlestick. It was looking really bad. I thought I was going to have a losing trade, but it turned out to be a winner, thank God. But here's what I'm talking about now with that setup and the analysis. Okay, so here's the setup. This is the ES side, and you can see when price hits the underside, Ezekiel, what's up? You can see when price hits the daily EQ on ES, this is the TP area. You see how it's aligned? And like I said, if for whatever reason the EQ rejects the price on ES, it's going to pull down NQ very bad. And look at how badly it takes it down. Now, granted, it's creating a higher low, but that's besides the point. I was just trying to frame the trade. And this is how I framed the trade today. And I tried to explain it as best as I could, as quickly as I could in the thread. So if you're not following along on the thread, make sure you do. Honestly, follow, because I used to share stuff like this in the premium side. And I had my own thread there, and it wasn't for anybody. It was for myself to learn and grow. And then I thought, you know what? I'm going to do that here on the free side, on the public side. And if you want to follow along, you can. The thing is, I'm not trying to influence your trades. I'm not trying to discourage you from doing anything. What I want to do is put everything that is in my head in real time in here. Specifically between 9:30 and 11. That is my goal, okay? I just want to put it all out here because it's better out than in, right? That's what they say. So for me, I have so many thoughts that run through my head when I'm looking at a chart. I have to put it down somewhere. So if that type of information resonates with you, please follow or tell your friends if they want to learn, because I'm putting it all here and I'm not holding back. I'm really not. So I'm going to just put it all out here. And everyone that knows me knows I'm not asking you for anything at all, just to be cool. You know what I'm saying? Rick says, just started following you on X, and here, like your personal and trading story, I used to be primarily a unicorn trader, but now incorporating IFVGs. I may have to DM you one day for some technical questions, if that's okay. Of course, man. Hit me up. Hit me up. Yeah, there's a follow button somewhere up here that you can use. I think it's this right here. Just hit the follow button. Even I'm following myself, for crying out loud. Appreciate it. Yeah, appreciate it. So let's go back to the memo. So we talked about the EQ and how to incorporate it with the connection between NQ and ES, okay? All it says on your checklist, there's that singular condition. Doesn't mean no FVGs. Okay, so let's talk about that. Sure, no problem. So let's go to the NQ setup for a sec. Okay, so this was the setup. We already know. I'm just going to mark it just so we have a visual aid. So there's the IFVG. I have the checklist right here. I'll just make it a little bit bigger. Okay, so here's the checklist. And what does it mean? So if we are entering right here, if we're entering right here, and we're going through this checklist, let's go through it. 930.11, yep, we're inside the kill zone. Premium and discount, we're using that as our higher time frame liquidity sweep level, and technically then it is on the right side of premium and discount based off how we're using it. Strong reaction, yep, nice V shape, right? Creates a swing failure pattern right here. Momentum, the least amount of candles it takes to confirm the IFVG, the better. What you don't want to see is loads of chop in here before it confirms. Now, what does that look like? Let me just quickly digress for a sec and show you what I mean. Because earlier, I was looking at a different type of setup, and I didn't know what was going to happen. So I'll show you what I mean. So there is a play right here on the 2-minute that I was watching. Okay, it was this, and in the thread, if you just go back, you'll see I was looking at. It was a 2-minute setup. It was a long. The idea was this candlestick right here is that daily EQ sweep. Two things about this I didn't like. Number one, I don't like it when the IFVG is too far away from the daily EQ on a play like this, but I was still watching it. The second thing is I don't want to see rejection inside of the IFVG because that's not showing me momentum. Even though there's a strong reaction off the key level, the momentum is not there, right? This candlestick was showing momentum, and I thought, oh, if this closes, we might have something here. Maybe I'll take it. But I knew there's a flag here because when the IFVG is formed this high above the daily EQ, that goes against really the concepts of being on the right side of premium and discount. If we just go back to where right here, let me go back to the 1 minute. You notice that this IFVG is much closer to, oh, sorry, not this one. Whoops. Right here. Sorry, this one right here. I don't know what I did. Right here. Okay. You'll notice that this IFVG is much closer to the daily EQ, which means you're on the right side of that premium and discount because you're playing the middle of that range to move higher, right? Expansion. Now, what does singular mean? I apologize, it took me a while to get there. What does singular mean? Singular means that when I'm taking a trade like this right here, if I look to the left, what I don't want to see are FVGs stacked up against me. Okay, so usually when you start seeing those massive spike moves where price is just like diving lower and then it hits like an H1 level or an H4 level, it's creating imbalance, right? Like we've seen that happen so many times. So think of something like this, right? Imbalance. Think of something like that, except on the way down, right? Because we're going long. So that is a clear that tells us that it's not singular, right? Even if an FVG forms there, like I would probably skip that because there's no telling which FVG price is going to reverse at. Now, you're saying there was an FVG and you still took the trade. Okay, so you as a trader have to understand where your own risk tolerance resides and how far is far. This trading game is not 100% mechanical, and if anyone tells you it is, you should be very, very cautious in taking that as, gospel. There's a huge chunk of this business is intuition based. And I'll tell it to you real, because I've tried to be mechanical as best as I can, and it just left me with blown accounts. So until you start to put in intuition into your trading, this is what makes you a trader, right? This is what makes you a trader. If you're not trading with intuition, you're no different than a bot. And you're not a bot, you're a human. And a human that has emotions, that has feelings. And that also means things are subjective. Take care, Nuno. I appreciate you being here. Have a great weekend. So let's just look at that for a second, because you're talking about the FVG. So if we look to the left, where is the FVG? The FVG is right here. This is the FVG in question. Okay. Now, two things. If I was taking this trade and this candlestick right here hit this level, like think of something like this. Think of this candlestick right here. If this candlestick was here instead of here, what that then tells me is I don't want to be in this trade. Why? Because it's already taken a draw on liquidity. I need price to reach for something. And yeah, you might say, well, aren't you trading for the higher time frame? I am, but I have to use the lower time frame more importantly, because I'm looking at 1R trades. So why did I take this trade? I took this trade because if I measured my TP and my 1R, right here is giving me 0.5. To me, this is singular. It's still singular. If the FVGs were around here, if the FVG was around here, then that would have meant that price could have reversed on me at any point from 0.25 or 0.3, right? That to me is where I would say it's non-singular. But because price around this area was around 0.5 and higher, and remember, I'm looking at ES. I'm looking at ES and gauging the strength of ES. You have to look at ES. You have to look at ES. You have to understand like what it's doing. Because if ES is showing me strength moving out of, well, not here, but right here. If ES is showing me strength, then I have to take that into consideration as well, right? Because I have to look at ES and say, does ES have the same FVG or liquidity in front of it to reverse? And it didn't. It didn't. It had equal highs up here. There was a swing point here that it reversed off of. Don't worry about this part right here for a sec. But that's the rejection here, which caused this move lower. But I felt like the risk to reward was worth it, given that ES hadn't tagged that underside yet. So if I go back to here, if I get rid of some of this for a sec, I hope that makes some sense. Because a lot of what I was looking at was the strength and momentum of price moving higher, right? Like I wanted to see price move higher into that range like this. Because I saw this liquidity here, like I said, when I was talking about the trade. And I was saying that it's interesting that it was left untagged. I thought the chances of this getting tagged first, and then if it is going to fail and go bearish completely, it could start from here. But my goal was to get out of that trade by then, right? Yeah, listen, that's the thing, right? Like, it's subjective, you know what I'm saying? Like, I mean, there have been setups, honestly, where I have skipped it because of this. I'm not going to lie. But here's the thing. And I'll say that to you in a different way. Because I mentioned, like, if this candle had swept the liquidity and then closed, then I wouldn't have taken it. Let's just say price closed up here, but didn't sweep that liquidity. What that then tells me, you see how it's now 0.39 to this area, maybe even lower? That to me is a definition of non-singular. I would have not taken the trade then, because I would have deemed this as being a roadblock. But because it was lower, my risk to reward was still intact, 39.5 points or so. and I'd be willing to risk what was going to happen because of where it was, and that there was all this liquidity up here, and like I said with ES. So I hope that makes some sense, kind of showing you the difference between what I would look at as singular versus what I would look at as being non-singular. So I hope that makes some sense. Let's go back to our notes. We talked about IFVG stop losses. Okay, so if we go back to my channel right here, I have a section called Trading IQ. Okay. I also have a section called Hard Time Frame Bias, like I talked about. We have obviously talked about the daily trading. I literally just started this trading section a couple days ago, and you can see I'm the only one posting in here. I'm going to be posting in here a lot. Already 177 posts I've put into this. Okay, so there's a lot of information I'm putting. It's not like, you know, one of those other alerts that people have, and they might put 5 alerts. Like 5 posts in a day. I'm putting it all out there. Like I said, I have a live stream section too, but what I want to focus on right now is the Trading IQ. So if you go into the Trading IQ, I've put right here suggestions for the stop loss placement. So when you're trading an IFVG, at least when I first started trading IFVGs, one of my biggest issues I had was the stop loss and trusting the setup itself. So what would usually happen is I would just set my stop loss at the low. Okay. Now here's the problem. 63.5 points stop loss is way too big. Ideally, for me, I'm comfortable with around 40. I find 30 to 40 points has been like a good sweet spot for me in terms of like my psychology. Other traders are going significantly closer. So in this case, they would even go something like this, 34.5 points. But if you know, look at what happens. Like, and this is part of the reason why I'm very cautious. If you set a stop loss like this, and that means then you need to make sure this stop loss is a soft stop loss. Take care, knucklehead. Peace out. You need to make sure this is a soft stop loss, because you want to wait for a candle closure below, and then you would manually close out. I don't recommend that, because anything can happen with a spike candle and take you out. So that's why I just use a bit more of a safer approach, and I will use market structure to help me out. So that's why I said it here. I use market structure. Let's go back to the Discord. So the first one, like I said, was a protected swing, right? That's one example. So you have an entry, you market order in, your stop loss goes at the low. That's one way to go about it. The problem with this, once again, like I said, it increases your stop loss size, which then means it increases your distance to the TP if you're going for 1R. And if you're going for 2R, it's going to push it even further out, right? Because if this is 60 points, then you need 120 points to get 2R. You only need 60 points to get to 1R. But still, 60 points is a lot of points. The second one is when you put the stop loss like a few points from the IFVG. And that's what I showed right here when I said you're talking about setting it super close like this, right? That's another way you can do it. The reason you would do something like that is, once again, because you're banking on momentum to go in your favor. You're using a soft stop loss, so your invalidation is a single candle closure below. Or if the candle is moving aggressively below and you're like, you know what, I got to bail. This trade's definitely not looking good. Even before the candle closes, you would just manually exit. The problem with that is your actual risk is undefined. Because if I set this up with my contracts to equal roughly around $300, but then let's say price closes way down here, this is no longer a $300 trade. And I haven't lost $300 now. I've lost more than that. So if you're comfortable with taking that risk, then doing something like this is okay. Okay? I don't recommend it. I think it's better to be safe than sorry. Use like a static stop loss. Okay? And that leads me to the third way to mark up a stop loss. And that is by identifying a swing point or some sort of market structure beyond where the IFVG is located. So it's not the protected swing. It could be like a higher low, or it could be like a lower high or something like that, right? So if we go back to the NQ example, and this is what I did today, was I didn't really have like a swing low to use per se, like a higher low, but what I did have were candle closures, right? So I could have used a wick like this candle right here, the candlestick that starts to create that star pattern. I could have used that, but I chose to actually just use the body instead. 40.75 points versus 39.5 points. Remember, my entry wasn't exactly right here because I got filled a little bit higher. So I think I was hovering around like 40.5 points today. And that's the thing with how I enter these positions. I don't use limit entries. I use market order entries. And I gauge roughly how much it's going to cost me, right? I'll already measure the ideal scenario from like around here to down here. And I'll say, I'll right click. I'll go to the actual trading section, and I'll just, put in one contract, two contracts. Like in this case, because it's NQ, I knew I was just trading one contract, so I just put one contract, and it is what it was. It was like, I think it was like $800 something. That's what I used today. So sometimes it's easier to just put one contract if that's what you're going to do, and if that's like your rule of thumb is just I always trade one contract of NQ no matter what that price is. I think I picked that up from Mr. Zink with those IBs. Sometimes he was trading one contract, but that trade could be $100 one day, but based off the setup the next day, it could be $300. So I thought that was really intriguing, but it also does something for your mindset. I wouldn't always do that, but today I felt pretty confident about this, so I thought I'll take it on NQ, which is what I did. So those are the three ways you can kind of going about placing your stop loss. And like I said, just like a little bit earlier, this whole thing isn't 100% mechanical. Like there's a good component to this that is subjective, that is intuition based, okay? Once again, sweaty spaghetti, it's not about size, man. Like it's like I can visually see, like say to myself 30 to 40 points is usually, if I look back at my data, that's usually the amount of points that I've allocated. And like that's the thing with my trading journal is I track points, like in terms of the position, how many points, because I'm trading 1R, right? So if it's 40 point stop loss, it's a 40 point win. But when I look back at my my TPs or even the couple losses I've taken, I'm ranging, because remember the candles are so big too, right? Loads of volatility means that everything's going to be amplified a bit bigger. I think I had a 60 point stop loss one day. I had a 37 one. I had one day it was only 13.75. Another one was 27, 38, 29, 55, 38, 40, 46, 43. So you get where I'm going with this, right? So I have that already in my mind of the general range of what I'm looking at. So in terms of points, that's how I would subjectively look at it. But then I have to look at the market structure to kind of align. So if you look at this, I already knew it was like around 40 points. And I had aligned the market structure with that to correlate to that number. So that's how I would have done it personally. I hope that answers your question. So we talked about that. And the other thing to talk about is the trading journal. So if you go into that Trading IQ section, if you just scroll up, I got loads of data here, okay? Yeah, that's a good point. Sorry, I just digressed to what he said. He says, some might misunderstand that and start trading more intuitively and drop the mechanical approach again. The thing is that you're only going to develop the intuitive skill to trade by showing up to live price action, doing the best you can to make some sort of intuition-based decision, and then watching what price does. And if you do this every single day with live price action, what that's going to do is it's going to give you experience. And over time, that experience is going to tell you something. So while some might drop it and drop a mechanical perspective, like I said, a portion of this trading business is not mechanical. And I don't care who says trading can be 100% mechanical. I just think that when I look at some of the best traders that we know of in this space, they are not trading 100% mechanical. Okay. If you look at guys like Jade Cap, if you look at guys like, even Matt, like even though some of the placement of a stop loss is mechanical, the entry function might be mechanical in process. The intuition lies in how he observes that unicorn form. That was really hard for me to do when I was learning unicorns. It was understanding an A+ unicorn to a B+ unicorn, or to a unicorn that's messy and choppy versus one that's clean. Even though price is never really clean, how would he deem that to be a clean unicorn? You're only going to learn that by showing up to the market in real time and applying knowledge as you go along and taking notes after to see what happened. Lets you know when to sit out. So I'm not trying to tell you what to do. Once again, I mean, it's a trial and error thing. I'm just showing you some ideas. Even the island guy said it. What did he say? Oh, that's Tracy. Okay. Is that what you mean? I'm just showing you ideas, okay? I'm just showing you 3 logical ways to go about this. And like I said, there's consequences to your decision making, right? If you are playing it too safe, then you risk not getting wins that you should have had. And I can't tell you how many times I had a chicken shit type stop loss where I placed it too far away. And it's like, man, I could have caught that win in like a minute had I just had more courage to just place my stop loss a little higher or closer to the FVG. If I had a little more courage, how do you get that courage? You have to show up to the live price action as much as you can. If it's every day, that's what you got to do. And you have to build conviction. Okay. So in terms of the trading journal, just to go back to that, if you go back to my Trading IQ thread, I have loads of stuff here. I have the stop loss placement suggestions, which we've just covered. I have my actual IFVG game plan here. If you want to take this and copy it, go ahead. It's there for you to use. Okay. I'm showing you every day how I trade. It's literally this. In our live streams, I talk you through basically all of this. And I have notes here of things that are like nuanced situations that you can't teach this. You have to experience it. I experienced the losses, which is why I put this here as a reminding note. Go check it out. I have some other motivational stuff here. I have my IFVG Pro Plus indicator that is a 2 degrees paid indicator. I have my settings here of what I use. And then the thing I wanted to talk about specifically is the trading journal. So if you just scroll back to February, take care, Alice. Peace out, brother. Have a good weekend, man. Same to you. I have the free Notion trading journal here. And if you click it, you can make a duplicate of it and then start adjusting it however you want. I just kind of made a little stock, image or whatever. Take it, do whatever you want with it. It's up to you. The whole point, though, is you can see the things I'm capturing. Notes, right? You can see how I'm doing this. Trade type, duration, what was the entry time, my P&L, how many points, right? How much was I actually risking? So if you're someone that's going to be skimming profit, well, your risk to reward is going to be different, right? Every trade. So when I first started learning about IFVGs and trading with the skimming profit idea, this was very valuable. Now that I moved to 1R, my risk and my PL are always going to, basically be the same. It's the points that become more of interest to me because then I can start to gauge the trend of the market. If I start seeing that my stop losses or my points are like 40, 30, 40 points, sometimes 50 points, what does that tell me? It tells me that this month has been hella volatile with massive candlesticks. If I go back to another month and I see that my average is like 20 points, 25, 30 points, that tells me that the market isn't as volatile as other months have been, right? And that's based off of news. Let's go to contracts. Why do I have contracts here? I have contracts here because it's important to know, I think when you're using MNQ, like how many contracts equate to X amount of dollars. Because at some point what happens is you're going to start to identify and remember like, 5 contracts equals roughly this amount of dollar risk. And that's why I kind of started tracking the contracts, because I wanted to know, like, how much is a $500 risk? How much is a $1,000 risk? You know what I mean? Like, how much are these risks that I'm taking? What does that equate to contracts typically? So that's why I put that in there. And of course, these other things, right? No trade. No trade just means, like, if you missed a day or you missed a trade and you reviewed the trade, you could still log it and then log it accurately as a no trade because you didn't take the trade, right? Like right here, I said missed trade setup due to the washroom, right? How many times does that happen to us? Happens all the time. Right? But this is a way I can still say, hey, and track it, because by tracking it when I review, it's still showing me that the play worked or it didn't work, but I'm tracking it nonetheless because it's a learning opportunity. Break even, loss win, pretty obvious. And then in terms of additional screenshots and execution could be your entry, execution could be your exit. Additional screenshots could be like I shared that chart today, where I was comparing ES and NQ and what I was looking for. This would be a perfect example of something I would put in that additional screenshot section, right? Perfect example. You put all that stuff in there because when you review, you have much more to go with to see what you did. You should always be reviewing your trades every week. You should always be reviewing how you did in the month, okay? And you have to put that time in. Like, you have to, otherwise you're gambling. You're not treating it like a business. You know what I mean? So I have the day here. And the beauty of doing this on Notion then is you can start to filter the columns. So like I can filter, looking at trades that only happened on a Tuesday that were only winners. How many were those in a month, right? Because then I can start to even find another trend of what day do most of my wins fall on? Right? So you can start to put those types of things together for yourself. And all that does is it starts to just give you more like IQ to give yourself a better sense of intuition when you show up to the day of what to potentially expect. Right? So we can expect things from a technical perspective, but then we can also anticipate things from a data perspective too. And that kind of comes back to like a lot of the stuff that Edgeful has. Edgeful has all that data with the ranges and stuff and the probabilities. But this is how I would use it with Notion and how you can do it yourself. So this is all available to you. It's free. Just like I said, head to my trading IQ section and it's all there. I mean, I even have other stuff in there too. So just go for it. Like I often talk about this, for example. I was trying to do some Instagram stuff for a while, and then I was like, Instagram sucks, man. It's just too, the dopamine type of hits are not safe, I think, for people who, I don't know, people who are very, have addictive personalities like myself. I have an addictive personality, and you can get lost in these dopamine type posts and things, and you're just swiping. So for me, I just stopped using Instagram altogether. But I did originally post this on Instagram. It talks about a lot of the things I talk about in the live stream, right? So anyways, loads of information here for you to use. Check it out when you get some free time. I'm sure there's something there for you. So anyone have any other questions? We've been going for a while. I'm going to probably end it right here. But if you have any more questions, drop it in the chat. I hope you got a lot out of today. I've been yapping nonstop. Some water. But I hope you had a green week. And if you're still kind of in the learning process of things, yeah, you know what? You're going to have to show up and backtest and review over the weekend after the sessions. I can't tell you how many times I've done that. But if you're someone who's, figured it out for the most part, touch some grass, right? Touch some grass. It's important to separate yourself from the screen too. You have a life outside of trading. And the whole point too of why we're trading is for the time freedom. And you can only respect the time freedom when you start to create the time freedom and force yourself off the charts. Because like I said, I have an addictive personality, so it's been very hard for me at times to pull myself off the chart. But I can tell you, when I have pulled myself off the chart, like, I'm my best self. So I would just put that out there to you. But yeah, I appreciate all of you. I really do. Appreciate you. If you're coming here for the first time, appreciate it. Bobby, thanks. Sweaty Spaghetti, appreciate it. Tracy, peace out. Yeah, peace out. And like I said, this is recorded, so I'm going to review it, make sure it is playable. And then what I'll do is if you just go back to my channel, I have the live stream section here. You can see anything I've done in the past. I've tried to label everything. So if you wanted to know more about the Edgeful stuff or the IB stuff, I have that there. If you wanted to know more about, you know, how I'm trading IFVGs or VWAPs and things like I mean, I try to put that in there so you can just kind of, you know, you don't have to waste time on things you don't want to hear about. If you want to know about mindset stuff, right? So it's all there. So Rick, yeah, appreciate it, man. Thanks for being here. And yeah, Xanu as well. Thank you so much, guys. Have a blessed weekend, and we'll be back on Monday. I'll be back on the live stream on Monday at 1 p.m. And we'll see how Monday goes. God bless. Peace out.